welcome to the Property Wealth Podcast. Today, we've got something really interesting lined up for you. If you've ever thought about using Facebook Marketplace to find motivated sellers, you're in for a treat.
Yeah, it's a game changer, really. It's amazing how many opportunities are out there that people just don't know about.
Exactly. You know, it's not just about browsing listings. It's about connecting with people who might be looking to sell quickly, often below market value.
Right, and that can really open up some doors for investors. You don't want to miss those opportunities, especially if you're aiming to build long-term wealth.
So, we'll dive into some practical tips on how to navigate Facebook Marketplace effectively and share some real-life success stories that might inspire you.
Plus, we'll also talk about what to look for in a motivated seller and how to assess if a deal is worth pursuing.
And of course, we'll touch on the importance of building relationships, because that's really what real estate is all about, isn't it?
Absolutely. It's about understanding people's needs and finding solutions that work for everyone involved.
So let's jump right into it. First off, what are some of the key things to keep in mind when you're browsing Facebook Marketplace for potential deals?
So, Sarah, when we talk about platforms like Facebook Marketplace, it really hits home for a lot of folks over 40, right?
Absolutely, Mike. It's not just about buying and selling stuff. It's about creating opportunities, especially in today's economic climate.
Yeah, exactly. With inflation being such a hot topic, a lot of people are worried about their retirement timelines. Many are realizing that traditional savings just aren't cutting it anymore.
Right. I mean, when you think about it, the cost of living keeps going up, and many folks are looking for ways to secure their financial future. Real estate can be a solid hedge against inflation.
For sure. I've worked with investors who started using Facebook Marketplace to find motivated sellers. They're not just looking for deals. They're finding real opportunities to build wealth and, create a nest egg for retirement.
Exactly. I remember one client. Let's call him Tom. He was just about to retire and realized his savings weren't going to support the lifestyle he envisioned. He started exploring properties through Facebook Marketplace, and he ended up purchasing a duplex.
Right, and that's a game changer. Not only is he generating rental income, but he's also leveraging that property to build equity over time. And let's not forget, it's something he can pass down to his kids too.
Yes, that wealth transfer aspect is so important. Many people in this age group are thinking about their legacy and how they can provide for their family. Real estate can be a wonderful way to do that.
Definitely. I've seen families take advantage of that, using properties as a source of wealth to help their kids with education or even their first home. It's like creating a foundation for future generations.
And it's also about emotional security, right? Knowing that you have a tangible asset that can grow in value, it gives a sense of stability.
Exactly. I had another investor, let's say her name was Linda. She was in her late 50s and she felt really anxious about retirement. After diving into the real estate market through platforms like Facebook Marketplace, she found a great deal on a fixer-upper.
Right. And she not only renovated it, but also learned so much in the process. That sense of empowerment is huge.
It really is. And think about it. When you own property, you have something that can potentially appreciate over time, unlike cash sitting in a bank account.
Well, and with the current economic trends, where interest rates are fluctuating, having a property can provide some protection against those shifts. You're not just relying on one source of income.
That's a great point. Real estate can diversify your portfolio. Plus, with the rise of virtual platforms, you can easily reach out to motivated sellers. It's all about being proactive.
Exactly. And for those who may be hesitant or unsure, it's about taking that first step, just like Tom and Linda did. They didn't wait for the perfect moment. They saw a need and acted on it.
Yeah, and that's the beauty of platforms like Facebook Marketplace. They provide that direct connection between buyers and sellers without the traditional barriers. It's empowering for anyone looking to start their real estate journey.
And for those over 40, it's about embracing technology too. It might feel a bit daunting at first, but once you get the hang of it, the opportunities can really open up.
Absolutely. Plus, many of these sellers are motivated for a reason, whether it's financial stress or needing to relocate quickly. They might be looking for a fast deal, which can benefit savvy investors.
Right, and that's where understanding the market comes into play. Knowing how to negotiate, find value, and create win-win scenarios is crucial.
Exactly. I've seen so many investors thrive by understanding the emotional side of selling. It's not just about the numbers. It's about connecting with people and understanding their needs.
That's a really important aspect. And it can lead to some fantastic opportunities. For example, Linda, after successfully flipping her first property, gained so much confidence that she went on to invest in a few more.
Yeah, and that's the ripple effect. One successful investment can lead to another, and soon enough, you're building a real portfolio.
And when you're over 40, building that portfolio can translate into financial freedom, more time for family, travel, or even pursuing passions you didn't have time for before.
Exactly, Sarah. And it's about taking control of your financial future rather than letting external factors dictate it.
Well said. The proactive approach is key, and tools like Facebook Marketplace can really empower you to find those motivated sellers.
Right, and it's never too late to start. Whether you're looking to supplement your income or create a more secure retirement, there are opportunities out there.
That leads us perfectly into the core strategies we can use to tap into this market.
So, diving into Facebook Marketplace, one of the first things you want to do is, well, really understand your market. Like, where are the most motivated sellers?
Right, and that's key. So how do we identify those areas?
A good starting point is looking for neighborhoods with a lot of, say, for sale by owner listings or homes that have been on the market for a while. That usually indicates sellers who might be a bit more motivated to negotiate,
Yeah, that makes sense. It's all about finding those opportunities where sellers might be eager to close quickly, right?
Exactly. And once you've got your target areas, you can start browsing Facebook Marketplace. When you find a listing, I'd recommend a checklist approach to evaluate if it's a good deal.
A checklist, huh? What would that look like?
Well, first, check the price against similar properties in the area. You can use tools like Zillow or Realtor.com to get a good idea of the market value.
So, a little comparison shopping then?
Definitely. And then, there's the 1% rule to consider. Essentially, if the property rents for 1% of its purchase price monthly, it's usually a good investment.
Okay, so if I find a house listed for $200,000, I'd want it to rent for at least $2,000 a month, right?
Exactly. But you also want to factor in other costs. Like, let's say your monthly expenses, mortgage, property taxes, maintenance, shouldn't exceed 50% of the rental income. That's the 50% rule.
Got it. So if your rent is $2,000, your total expenses should be around $1,000 a month.
Right, and that gives you some breathing room for cash flow, and, if the numbers don't add up, it might be a sign to pass on that deal.
That makes sense. But what about financing?
Good question. For many people over 40, traditional financing might be an option, but you could also consider creative financing. For example, seller financing can be a great way to negotiate directly with the seller.
Seller financing. That sounds interesting. How does that work?
Well, instead of going through a bank, the seller acts as the lender. You agree on a price, and then you make payments directly to them. It can be a win-win if the seller wants to sell quickly, and you want to avoid the traditional lending process.
Yeah, and that could help if someone's trying to offload a property quickly, especially if they need cash fast.
Exactly. And then you also have hard money lenders, which can be useful for short-term projects. They usually charge higher interest rates, but can get you cash quickly for fix and flip opportunities.
Okay, but I imagine the terms can be a bit steep.
Yeah, they can be. So it's crucial to calculate your potential return on investment carefully, especially if you're doing a flip.
Right. And knowing your exit strategy is so important.
Absolutely. And speaking of properties, when you're browsing listings, consider different property types too. Single-family homes are great, but don't overlook multifamily units. They can provide a more significant cash flow with less risk, since you're not relying on a single tenant.
That's true. More doors usually mean more income, right?
Exactly. And if you find a duplex or fourplex, you can live in one unit and rent out the others. It's a smart way to build equity while keeping your living costs low.
I love that idea. So I guess the key is to keep your options open.
Definitely, and make sure to analyze the potential return on investment using cap rates. A simple way to calculate that is to take the property's net operating income and divide it by the purchase price.
So, if a property brings in $30,000 a year in income after expenses and you buy it for $300,000, the cap rate would be, what, 10%?
Right. That's a solid cap rate. Generally, anything above 8% is considered a good investment in many markets.
That's a helpful benchmark. So it seems like there's a lot to consider when using Facebook Marketplace for finding motivated sellers.
Absolutely, but it's also about being consistent and relentless. You may have to go through dozens of listings to find the right one.
But it sounds worth it. I mean, with the right strategy, you could really build some amazing wealth.
Right, but it's also important to stay clear of common pitfalls.
Oh, like what?
Well, one major pitfall is jumping in without doing your due diligence. Always inspect the property and understand any potential issues before making an offer.
Yeah, because, hidden problems can cost a lot down the road.
Exactly. And then there's the emotional side of things. Sometimes you might fall in love with a property and overlook the numbers.
That's a tough one. You've got to stick to the plan and not get sidetracked.
Absolutely. Keep your eye on the prize, and remember that real estate is a long game.
That's such a great way to put it. I think if listeners can keep these strategies in mind, they'll be well on their way to making savvy investments through Facebook Marketplace.
For sure. Sarah, one of the biggest pitfalls I see with new investors is over-leveraging.
Yeah, that's a big one. It can seem tempting to just go all in, right?
Exactly. I mean, they see potential returns and think, if I just take out a bigger loan, I can buy more properties. But then
they end up stretching themselves too thin, don't they?
Right. And when unexpected expenses come up, like repairs or vacancies, they find themselves in a really tough spot. I had a client once, let's call him Tom. He bought 3 properties in quick succession, all with high debt.
Oh no, what happened?
Well, one of the properties had a major plumbing issue that cost him a fortune. And because he was already maxed out on his loans, he couldn't afford to fix it without taking out another loan, which just added to the problem.
That's such a classic example. So what can people do to avoid that kind of situation?
Good question. The key is to really assess your financial capacity before committing to any purchase. You want to ensure you have enough reserves for unexpected costs, and also to consider your cash flow.
Cash flow, right? That's crucial.
It really is. I've seen investors focus so much on the potential value of a property that they ignore the cash flow it generates.
Can you give an example of that?
Sure. So there was this investor, let's call her Lisa. She bought a property in a neighborhood she thought was up and coming.
Sounds promising at first.
It did, but she didn't factor in how much the property would actually cost to maintain or what the rental income would be. The rent was lower than she anticipated, and with high maintenance costs, she was losing money every month.
That must have been frustrating for her.
Very. And when she realized it, it was too late. She was already in, and the cash flow issues were piling up.
So how can someone spot those cash flow red flags early on?
One simple way is to run the numbers before you buy. Look at historical rental prices in the area, average maintenance costs, and, don't just assume it will appreciate in value.
Right. It's about being realistic, isn't it?
Absolutely. And then there's the issue of tenants.
Oh boy, that can be a whole other challenge.
Yeah, it really can. I've seen investors take on tenants without doing proper background checks.
That's risky.
It is. I had a friend, let's call him Dave, who rented to a tenant without checking their references.
What happened?
Well, it turned out the tenant had a history of not paying rent on time. Within a couple of months, Dave was dealing with late payments and eventually had to evict them.
That sounds stressful.
It was. And he lost a lot of money in the process, not just from lost rent, but also from legal fees and the cost of getting the place ready for new tenants.
So what's the best way to avoid tenant issues?
A thorough screening process is crucial. Check references, do credit checks, and, have a solid lease agreement in place that outlines expectations clearly.
That makes a lot of sense.
Another pitfall I see often is investors trying to time the market.
Oh, that's a tricky game to play.
It really is. I had a couple come to me who were convinced that prices were going to drop, so they held off on buying for months, waiting for the perfect moment.
And did that moment ever come?
Not at all. Prices just continued to rise, and by the time they finally decided to buy, they ended up spending a lot more than they would have if they'd acted earlier.
So what's the takeaway here?
The best strategy is to focus on long-term fundamentals rather than trying to predict the market.
Yeah, that's solid advice.
And let's not forget about hidden costs.
Oh, those can be sneaky, can't they?
They really can. I had an investor, we'll call her Amy, who bought a property and didn't account for things like property taxes, insurance, or HOA fees.
That must have hit her hard once she realized.
You bet it did. She was shocked to discover her profit margins were way lower than she expected because of those additional costs.
So how can someone prepare for those hidden costs?
The best approach is to do thorough research. Talk to other investors in the area, get a breakdown of all potential costs, and factor those into your budget from the start.
That sounds like a smart plan.
It really is. And if you do find yourself in a tight spot, remember that it's important to take a step back and reassess your situation.
Yeah, sometimes it's just about adjusting your strategy, isn't it?
Exactly. Don't be afraid to reach out to mentors or professionals who can help you navigate the challenges.
That's really encouraging to hear.
Well, it's all part of the learning process. Real estate investing is a journey, and it's okay to make mistakes as long as you learn from them.
Absolutely. And with the right knowledge and support, those pitfalls can be avoided.
That's the goal. Focus on building a solid foundation and staying informed, and you'll be well on your way to success.
And with that, let's talk about what our listeners can do next.
All right, so now that we've covered the basics of using Facebook Marketplace for finding motivated sellers, let's dive into some actionable steps that you can take right away.
Yeah, I love that idea. What's the first thing listeners can do?
Well, I'd say start by setting up your Facebook Marketplace account if you haven't already. You know, it's pretty straightforward. Just make sure your profile is professional and consider using a clear profile picture. You want to come across as trustworthy.
Right, that makes sense. It's all about creating that good first impression, isn't it?
Exactly. Then start browsing listings. Spend some time each day looking at properties in your target area. Look for keywords like need to sell fast or motivated seller. Those phrases can be really telling.
So what if someone finds a property that interests them?
Good question. They should definitely reach out to the seller, but I recommend preparing a few questions beforehand. Ask about the condition of the property, any repairs that might be needed, and the seller's timeline for selling. This can help you gauge their motivation.
That's a great tip. And for those who might feel a bit overwhelmed, what would you suggest as a first step in analyzing a potential deal?
I'd suggest using some online tools to help with that. For instance, the BiggerPockets calculator is fantastic for analyzing deals. You can plug in all the numbers and see if it makes sense as an investment.
I've heard of that one. Are there other tools you'd recommend?
Definitely. Rentometer is useful for checking rental rates in your area. If you're looking at a property to rent out, knowing what similar properties are charging can be crucial. And if you have access to your local MLS, that's gold. It gives you the most accurate and up-to-date information.
Right. So it sounds like having the right tools can really empower you to make informed decisions. What about any apps?
Sure. DealCheck is another app worth checking out. It allows you to analyze your potential rental properties right from your phone. Super handy for those on-the-go moments.
That's awesome. So, aside from tools, what habits should listeners start developing to keep moving forward?
I'd recommend starting with small, manageable goals. For example, commit to analyzing one deal a week. It doesn't have to be a big deal. Just pick something that catches your eye and break it down.
I love that. It sounds achievable, which is key. What else?
Joining a local real estate meetup can be really beneficial too. Getting to know others in your area who are also investing can provide support, motivation, and maybe even partnership opportunities. Plus, you can learn from their experiences.
Networking is so important, isn't it? Just being around like-minded people can really boost your confidence.
Absolutely. And if you're more into learning through books or podcasts, I'd say check out Rich Dad, Poor Dad by Robert Kiyosaki. That's a classic. And for podcasts, BiggerPockets Podcast is full of great stories and actionable advice.
Those are solid recommendations. It's all about gaining knowledge and confidence, right?
Exactly. And remember, start where you are. Every small step counts. Even if it's just reading a book or browsing listings, it all adds up over time.
So true. And I think for many, taking that first step can be the hardest part.
Yes, but once you do, momentum builds. You'll be surprised at how quickly you can start feeling more confident and capable in real estate.
And the beauty is, you don't have to have everything figured out from the get-go. Just take those first steps.
Right, and keep pushing forward. A little progress each day can lead to significant gains down the road.
Exactly. So with all these tools in your pocket, you're ready to move forward. What's next on the horizon for our listeners?
Well, Sarah, it's been quite the journey diving into Facebook Marketplace for motivated sellers.
Absolutely. I think we hit on some key points that can really help our listeners, right?
For sure. So first off, leveraging local groups and communities on Facebook can really open doors to opportunities that might not be listed elsewhere.
And then there's the importance of clear, engaging listings. Professional photos and honest descriptions can make such a difference.
Exactly. And don't forget about the power of connection. Building relationships with sellers can lead to some great deals.
Right. It's not just about the transaction. It's about understanding their needs and establishing trust.
Plus, we talked about the value of being proactive and reaching out to potential sellers, not waiting for them to come to you.
Yeah, that's a game changer. It's all about taking that initiative.
And let's not forget the importance of patience and persistence in the process. Real estate isn't a sprint, it's a marathon.
So true. Building wealth through real estate takes time, but with the right strategies, it's definitely achievable.
And for those listening, remember that every step you take today is a step toward your financial future.
Right. So if you found value in today's episode, we'd love for you to like, subscribe, and share your biggest takeaway or any questions in the comments.
And if you know someone over 40 who's looking to invest in property, share this episode with them. It could really help.
Next time, we'll dive into Craigslist and FSBO hacks for 2026. I can't wait to explore those strategies.
Me neither. It's going to be a fantastic discussion.
Thanks for joining us today, everyone. Until next time.
Take care and happy investing.